you are a digital asset investor with crypto activity spanning many years, many platforms, or someone that just has incomplete records, this video is for you. What I want to discuss today is historical accounting and cost basis reconstruction and what this process really entails. So crypto cost basis reconstruction is a process of rebuilding your digital asset transaction history at the tax lot level in order to calculate not only your gains and losses and income for each applicable tax year, but to calculate your cost basis for all of those tax years. And this is one of the most important reasons why investors are still going back 5, 10 plus years to do this historical accounting and cost basis reconstruction process. Not only do they need to have their taxes accurately calculated, but just as importantly, sometimes more importantly, they need to have their cost basis accurate because this will follow them into future tax years. So this is becoming increasingly important for taxpayers as the transactions for digital assets become increasingly visible to tax agencies via Form 1099-DA and other third-party reporting that is being implemented for digital assets. So let's go over a bit on, why people are in this position. Digital asset compliance has been historically very low across the board of digital asset investors. And, this is partially ideology based, but partially just based off of the circumstances of digital assets. We are talking about somewhere, industry where we have fragmented wallet usage, multiple exchanges that people are trading on, protocol level complexity when it comes to both data and tax characterization. And overall, there's been no consistency across all of these data sources in data formatting, and there's been no consistent record retention from most taxpayers. So, most taxpayers have, again, been non-compliant. Some have been filing. Most have not been keeping sound records with defensible audit trails, flat level cost basis reports, and something that can really stand up for scrutiny. So why is this so important, and where do the issues come in? It really comes down to the cost basis, because if you don't do your calculation for a year, of course you have issues for that tax year. You're not compliant, potentially you're maybe underreporting, but at least that's isolated to that specific tax year, as bad as it may be. When we get into the cost basis considerations for your digital assets, this is something that can follow you into future years, because tracking your cost basis is a cumulative process. So what that means is if you purchased Bitcoin or Ethereum 10 years ago, and then, since that initial purchase, you've been maybe accumulating more of it, maybe sometimes selling it, moving it around to different wallets. All of these movements need to be tracked, and they're all going to cumulatively impact your current cost basis of the Bitcoin you're still holding today. So when you calculate your basis for the year 2025, at the end of that 2025 year, the ending basis is the beginning basis for 2026. So you always have to pick up where you started. So if your cost basis is inaccurate for 1 year and you start your calculation based off of that inaccurate data, it's likely to be inaccurate as you move forward to future years. For as long as you hold these assets with this inaccurate basis, you're going to have these inaccuracies baked into your portfolio. And when you go to dispose of those assets, you're going to have these reconciliation issues. So these cost basis errors can follow you around and haunt you for as long as you hold these assets. So what does cost basis reconstruction mean? This is a systematic rebuilding of your digital asset ledger at the tax lot level. We start with your earliest transaction, and we do all the accounting steps and reconciliation for each tax year. Pre-transfer, pre-disposition, pre-deposit, withdrawal, pre-exchange, and conversion needs to be accounted for. And every digital asset movement needs to be documented within your audit trail. Most importantly, the reporting that you produce, including the digital asset cost basis report, needs to be able to trace back to a defensible ledger for every single transaction that took place. And this is where most investors are going to fall short because they don't have these records. So, what does the reporting look like? The most important thing during this cost basis reconstruction process from my standpoint is the cost basis report. Not all tax softwares will give you this report. It's a detailed tax lot level cost basis report. It could sometimes be called a closing position report. So that's going to show at the tax lot level all the assets you're still holding, the cost basis that's been applied based off of your cost basis pools and methodology, and the dates that were purchased, the amounts, and all the other related information. You also want a disposition schedule that's showing every asset that you dispose of that triggered a gain or loss, along with a spending and income, gifting. You want all of these documented on separate schedules. And most importantly, you want a consolidated set of transactions that includes every transaction that took place for that year. So you want to capture all this transaction level data, but you want to go a step further and you want to document the steps that you've taken and the assumptions that you've made during this cost basis reconstruction process. A formal methodology memorandum that covers the scope, the cost basis method that was used, if revenue procedure 2024-8 was applied, if there were data gaps, what assumptions did you apply from a tax perspective. So you need to be building all of this data as you're doing this reconstruction process. And this is the question that I usually get from people. Can we just start this year? Again, there's a cumulative nature to tracking your cost basis. So if you have prior activity and those digital assets are carrying forward into your current year, you're going to have to go back and calculate this all accurately, or your starting position is going to be inaccurate. So the next big challenge that is creating more complication for digital asset investors who haven't done this process is now we have Form TDA, which began with the tax year 2025, where proceeds are being reported. And, this is something that we're working through with clients at Camuso CPA. As we move forward into future years, cost basis data will be phased in, reporting will become more granular, more account specific, and it could potentially make mismatches easier to detect. So taxpayers not only need to align themselves with these broker reported statements and make sure that this is all reported correctly and any reconciliation issues are appropriately reconciled on your return and reported, but you need to make sure that you have this cost basis information accurate. For legacy assets, the exchanges are not going to have this data to put on the 1099 DA. You're going to have to substantiate those cost basis positions. So it's very important that you have this cost basis data. It's going to become more visible. And when you dispose of these assets, you are going to have to take a position on what your calculated basis is. And this can have an impact on your holding period as well as your gains. And also, if you're only selling a partial of that asset, the other portion can carry forward into future years. So it's just imperative to get this correct. So when you're doing your digital asset accounting, there are some other considerations. Back in 2024, they actually clarified how digital asset accounting should be done. And there were two big shifts. One that's most important for the topic right now, which is shifting from universal to account-based, meaning you used to pool all digital assets into one cost basis pool and apply a accounting method to it. Going forward, you need to now apply an accounting method not only on a per asset basis, but on a per wallet, per account basis. So you're not going to pull all the assets into one major account. So this is approached differently for different taxpayers. For taxpayers who have historically tracked universally, may make sense to continue with the universal calculation until the transition period after 2024. And then you have to take an additional step with an allocation procedure in order to shift from universal to account based. Now, there was a specific timeline that this had to be completed if you were going to qualify for a safe harbor, which is passed. But if you are a taxpayer that still has your books on universal, you're going to have to make that shift. And for some taxpayers who are maybe completely not compliant, it also can be considered, should you start from account based from the start if this is going to be the first time that you're doing the calculation. So, this is very important because this changes the cost basis calculation significantly depending on how these assets are batched and, the ordering and the accounting methodology and how the cost basis really pulls together. So you want to get this correct for the prior year reconstruction. But something else I see is that a lot of people are still unaware of this, even to this day. And you need to make sure that you're operating under the correct methodology as you move forward into future years later, and you're considering this revenue procedure. So I've done completely separate videos on this, and there's a lot to unpack with this from a compliance standpoint, even from a tax planning standpoint. So I encourage you to go and watch those videos. Now, one challenge that is common in most historical accounting and cost basis reconstruction engagements is, because we're going back maybe 5-10 years, right? It's going to be very rare that we work on an engagement like this and we just have perfect, pristine data. There's usually going to be some common data gaps related to exchange shutdowns, and maybe the taxpayer didn't get the CSV. Maybe the CSVs that are coming from an exchange that they did save them from, maybe it's not fully complete or not formatted correctly. Maybe they're interacting with a certain protocol. When you pull down the data via an API, there's indexing gaps that need to be filled in if we're going to get to correct flow of funds and tax characterization. Maybe we're working with a client where, because they've had so many wallets for the past 10 years, we're seeing some information on chain that's showing funds going to a wallet, and they didn't disclose that to us. And we need to figure out, do they own this wallet? Is this a friend's wallet? What is the nature of this transaction? So this is where properly reconciling transactions and tracking and tracing the transactions through the whole flow of funds, through all the on-chain transactions that may be taking place, is really what it takes to piece this together. So, you can't just take your wallets and take your exchanges, plug them into one of these crypto tax softwares and think everything's going to be accurate. You are going to have to, at a granular level, zero down onto every single potential data gap that you may have and start to track and trace that through the block explorers to piece together as much context and information that happened with those transactions as possible. And then it gets very contextual based off of that context and the data that you did build. You're going to have to make assumptions and document those formal assumptions on the tax treatment. And you want to apply conservative tax treatment to most data gaps that you encounter. So overall, this is a question I get a lot at Camuso CPA, where, they're like, okay, I do want to do this historical reconstruction, but I'm just getting worried because I don't have all my records. I don't remember all my wallets. I usually say you and everyone else. Most people are not going to remember every wallet they have or have every exchange when they're going 10 years back. And this is going to be part of the reconstruction process, is seeing where these reconciliation gaps exist, applying a conservative tax treatment to those reconciliation gaps after gathering the full context via on-chain research and accounting. And then the last step is documenting these assumptions, so you have them in your permanent records along with your audit trail and accounting for audit defense purposes. So another challenge with the cost basis reconstructions that I briefly mentioned just a moment ago is that you can't just blindly rely on crypto tax softwares. They're useful because they're going to assist with us aggregating large amounts of data across many data sources. But it is well documented through not only practitioner observations, but through research as well that I've even covered on my podcast with the researchers that conducted it, that different platforms produce materially different results from the same underlying transactions. Meaning you can go and take a tax year that you did, potentially put it into 4 different crypto tax calculators and get 4 different results. And, the treatment varies because there's just many variables and assumptions that go into these calculations. It can be a divergence in treatment across your missing acquisition history, how transfers are matched, protocol classification, pricing, how timestamps are applied, how, tax characterization is going to get applied to certain transactions like wrapping, earning, taking. You need to understand that it's not plug and play. And additionally, in the event of an audit, you as a taxpayer are responsible for what you're claiming on your return. You're not going to be able to just point to a software output and say, I relied on that and leave it at that. It's It's your responsibility to ensure accuracy with this. And another challenge is that not all platforms are going to give you that tax lot level cost basis report. This is an issue because after you've done maybe 5 to 10 years of reconciling data on that platform, if you ever wanted to switch from that platform, it's going to be more of a challenge to switch without redoing the reconciliation, because you're not going to just be able to take that tax lot level report and roll it into a different system. So you want to make sure that you are able to defend the methodology that you're accounting with, and you're not just blindly relying on the software, that if there's data gaps, you're documenting them, that you have the reporting that you need to retain for your permanent documentation for tax purposes. And overall, the integrity of your calculation, the defensibleness of it, and the documentation is your responsibility to maintain. So what are some common mistakes that I see? And what I'll say is that, I see a lot of errors in cost basis calculations. We spend a lot of time cleaning those errors up with taxpayers. And it's not just, the errors that we see come from taxpayers. It comes from other firms that are performing these calculations. So, as a taxpayer, you need to be diligent in checking the quality of this work, whether you're doing it yourself or whether you're working with a firm, because there are many variables that go into this, and there's many ways that you can end up with the wrong cost basis calculation. So, I see a lot of taxpayers just basically, like I was saying, just treat the software output as reliable substantiation of their tax positions and calculation, and of this isn't going to work. I also see a lot of taxpayers not doing important due diligence steps, such as comparing their calculated ending holdings to their actual ending holdings. A lot of times, if they did this, it would show variances or errors in their calculation that often go overlooked. And this is particularly problematic because if you do have ending basis issues, again, they're carrying into future years. Another issue is not checking all the assumptions that went into the calculation, and also not documenting them when it comes to untraced withdrawals or deposits. For instance, how is the tax software that you're using treating that? Are they treating it conservatively, aggressively? How are you documenting that? A lot of times these things go overlooked. Revenue Procedure 2024-28, from the shift to universal to account base, that's another big issue that I see many people overlook and are still not compliant with. So overall, you need to make sure that you are doing your diligence, taking all these steps that I listed, and then documenting them, and then making sure that you save all of the reporting that gets produced from these efforts. So earlier this year, I gave a speech at ETH Denver where I said that we are entering the digital asset compliance era, and that is what we are currently in. 99DA is the first step to making these transactions more visible to tax agencies, including the IRS. And we're going to see the compliance environment for digital assets to continue to increase in complexity as time moves on, and more reporting with the DA phases in, international reporting with CARF phases in, and we start to see tax legislation get implemented, which will change more and add more complications to some of these considerations when we're doing the accounting and tracking basis. So it's more imperative than ever to get this process done and get it done right, to go back into your historical accounting, get everything calculated correctly, and get that cost basis reconstructed so you can actually defend this going forward. And at Camuso CPA, we have not only been warning investors to avoid this issue since 2016, but we have been doing the historical accounting and cost basis reconstruction since 2016. So regardless of the issues that are embedded in these calculations, the level of complexity that you may have in your portfolio on chain, our team at Camuso CPA can assist with this. We follow a detailed reconstruction process that will deal with all of the issues that we discussed here in this video. And we have done this for thousands of clients. So if you want a defensible cost basis and to finally get rid of these compliance headaches that have been haunting you in your crypto portfolio, sometimes for 5 to 10 years, that's where Camuso CPA can come in. We can take you through this whole cost basis reconstruction process. And then after that, we can not only assist you with maintaining your portfolio accounting, but we can assist you with tax reporting and tax planning as well. So if this is something that you need, you can feel free to reach out to me and my team at Camuso CPA. You can visit our website, camusocpa.com, go to the contact us page and set a consultation and a time to speak with me directly. And I'd be more than happy to discuss your fact pattern, discuss your portfolio, and go over in detail exactly our accounting process that will get your historical records cleaned up and get your cost basis accurately reconstructed.